So it's being cognizant that it's very possible, and this is just trading how it goes. It's very possible we move into the light, and then we can get a few failures up here. And it's very possible maybe Nvidia never gets above 118, right? That could be very possible too. Probably with automation continuing to unfold, it's probably not likely. The biggest culprit of that would probably be these lawsuits. If, like I've mentioned this before, if the government hops on their back, or if the courts do, because they're like you're mining, IP that is copyright protected or patent protected, and you're just reorganizing it and offering it up, and you can't do that. That could hurt because then it takes them off kind of the public market, and they just go fully proprietary at that point, really. And I know they make a lot of money that way, anyways, but it could damage them. Trump's talked about all these servers, AI this, AI that. And so maybe the courts damage that idea. But as we know with open states, we do close them. Today we closed 3, we closed 1 up, 2 down. So we know they do get closed. We do that day in, day out. We do know that they get closed on a larger time frame, because we can look back here to the left and see that. So it's just a question of when. Can we be ready when that time occurs? Now, if we look across the top, this is another thing I like to do. So I got one, I'm going to do this large. If I get hit by a bus one day and, Aaron and still running everything, everybody will know how to do this, making sure to the people. 4, 5, 6, 7, 8. That goes to that one. 9. I don't think I'm missing any. If I do, it's probably not too big of a deal. 10. Got 11 here. We've got 12 here. 13 here. So all I'm doing is enumerating these out. 14, 15. That was messy. 16, 17. Call this 18. So let's say we've got 18, and then how many worked out? So one, this large, got 1, 2, 3, 4, 5. I'll say the 6. This one we're not going to count because we started from an area that was too deep. So we'll say that was kind of an anomaly outside our move. And this could, it did start that deep. So I wouldn't discount this. But if this does move up, this would be like considered for the anomaly. I would, in my head, I'd say it's more of an anomaly if we get that move. And this is just like gutter trading, street trading, right? Or just, attack the market in a different way, trying to look at things differently so we can maybe get a clearer picture. Because the Earth's pictures are the best. Even though there's a lot of writing on here, it's still, to me, it's clear. Makes a lot of sense to me. Monster rally would come out of a shallow pullback, because that means most of the powder versus, down here we're burning up, just burning up, have an explosive move. So it makes sense that a little bit of powder, the market's regurgitating all these moves. People are buying, holding, a lot of people buying and holding. And eventually it gets to a point where that supply has kind of been absorbed. Then we have our then that allows us to have the mostly. So we're here at a same way, are we absorbing? And we are, down. People are like, oh, I'm buying Nvidia 90 or whatever. Well, it is a hold. So you have a lot of people out there, institutional side, Wall Street, Nvidia, and regulatory environment like these. So if we're not going, it's going to go up, but here we're taking a position that, yeah, that can occur, can be out in front of us. If we can catch that, if we can catch our timing, we can really benefit by that move. The other thing we want to be cognizant of is time. So here's 65 trading days, 26 trading days to high. Here, I can't see it. I can't see that. 32. Don't know. But those on the system, you can go in there and you can see. So let's say it's about 65 trading days. And we don't know. It could be more or less. If we did hit that, maybe it's 120. We don't know. But this gives us an idea of the expiration on the calendar. So right there we have the idea of expiration and the pivot crossover. So what I did to show potential of that call, I said, what's about 50 days in front of us? 18th, I believe. Just, as a heads up, just to see what can be happening here. So I think one of the keys here is start getting above this. We need something to show us that is in fact the case. And the only way with the price action, one of the big things is, since this is, computing something like this is so complicated, one of the ways to watch it, because you can't really use positioning in the order book because it's just not going to be there. And you can't really look at options in the future because we're trying to find stuff that's not priced right. If it's priced right, this 212.61 is going to probably be at least $1. So we can't really look into the chain into July and be like, oh, it's $1, so the market already knows that. I looked at it and was like, oh, its thing is priced way down here. So the market, whether we're going to hit in July or not, let's say we did hit July 18th, that tells us the writers, they have no idea that could be in the works, that this 212 could be in the works. Because that option I sent out, I think I sent the 180 out. So the 180, if it knew that was in the works, it would already be priced at $30. And it's not, like it's 40 cents, whatever, 30 cents. So that means that if July 18th was the date, that means the market has no idea that could be coming down the pike. Now, because, we are trying to find these opportunities where the market doesn't know about them. They don't recognize them. That's the only way we can win if we're holding directionally. So it could be that maybe the market does know about it, and maybe the market's like, nope, we're going to have this pullback right here. That's why we're pricing that contract Russell's looking at 40. So we know he's a sucker. And he's thinking July 18th today. And we're like, nope, it's going to be further on down the road. And that could be the case. So, watching these forward-looking contracts, a tip off, but we want them to be out of the know. We want them to be like in this range or less so we can have the big upside. So, what we've got to be cognizant of again is, are we going to be breaking here, or are we going to be pulling back and seeking out this zone? Are we absorbing stock? Like, is everybody done selling kind of thing? And is the fear over with? Is the market kind of ready to tackle upside again? Because, we're seeing that we've got to come, by and large, we've got to come out of this zone down here. So that means we're probably going to have to emanate from this. That means we probably have maybe another pullback in store, but we need to keep an eye on this. Now, out of 18 attempts for a rally, any kind of a monster rally, what we're calling a monster rally, we're successful. So that's about a 33% win rate. That means that it could take, and the spacing here, so we had one failure. We had this weirdo one. But the spacing, here we had a back-to-back rally. So a rally after rally. Here we had, a failure, and a failure. So we had 3 in a row. Here we had a failure and a failure, 2 in a row. So I've sent this out yesterday. I got some DMs. Oh my God, I'm going to put a ton of money into it. I was like, hang on and wait until we look at this more in depth. Because I said we need to plan on failures, because we need to plan on the risk. That's why, you don't want to go all in, assuming that we're going to hit this on this first crossover. It's possible, but we might not. So I would plan on, I don't know the future, but we've had kind of 3 failures in a row. So that means maybe we have 3 failures going forward. Maybe we have 1, 2, and then we have a third one. So you kind of got to ask yourself too, is a trade having, 3 failures in a row, and maybe we get tricked by the market. Maybe it does break out a little bit here and then it turned down. So I got to kind of contemplate that. Like, can that be possible that we have, maybe we have 3 failures in a row, maybe we have 2, maybe we have 1, maybe this works, maybe we have 4 failures. So we got to look at our risk. Like, when we go into this trade, are we okay losing part or all of that money trying to seek out this upside? Now, assuming that it will always be a 40 in or less to a, maybe a 35, 30, let's call it a 32 out. The 32 outs only if we get to this top line. Then, yeah, that's like way worth it. The other problem is psychologically, I've done this before and it's not easy. Like, as we're climbing, let's say we are achieving that and we're climbing. I mean, every day you go in there and you look at that, is this the day we're topping out? Is this the day? Are we not going to achieve that? Are we not going to achieve it? So maybe it does achieve the 32. You get really cold feet at night. I can't take this anymore. So at 9, from 49, you take yourself out, right? So that's another thing. Then it gets to 32, maybe, or 30 or whatever. And you're like, oh my God, oh, I did that. So, when we do start the trade, getting your head on straight is very difficult because, it's a little easier. We go 40 to 80, say whatever, this may or may not happen, but let's say it does happen. We go to 80, you're like, oh, it's 100%. I mean, it just gets, and then you get to 10, and then you get to 20. You're like, holy crap, I've got whatever in it. Now I'm at 20, I'm at 2,000 a con. I've got like, several of these things. In the past, I've had bad blunders and then I've had good success. Gone in and was talking about Juniper. That trade really made me irritated. It ended up working, just one day outside of my scope. but a lot of contracts, and I had thousands and thousands of them, and that one didn't work. When they work, and you have like, and even one's legit, if you're like, maybe Russell's crazy, and maybe this, I see these open lines, I see they're hitting, but I don't believe it could ever do that again. This was all, just a freak over here thing, an outlier situation, and we'll never hit these again. It'd be like that and be like, I don't think it'll go up, but they do. But when it does again, when you're here, and it's totally legit. I mean, at least you're making money. So if you go to 40 and you knock out at $1 or $10 or 20, if we have the opportunity, better not making anything. But it just, on these failed attempts, it needs to be able to make back any failures here. So when it does start moving, whatever happens, I don't know. And it may be a year out or 2 years or maybe sooner, but need to be coming out of this break even. Because I know I've seen this. So somebody, and I feel like this when I first started trading. So I'd put on a trade and then I'd be like, okay, I'll do 10 contracts. And then it fails. So I'm like, oh, wow. It was back in the 80s. I'm like, well, that didn't do good. And then I come up to bat a second time on the trade, and I'm like, no, it didn't work the next time. So now I'm going to do 5. And then there's a win. And then I look back on it, and I was like, that's totally 100% stupid what I just did. It's like, why did I have this failure? And then on the next one, I'm scared, because it has nothing to do with I'm scared or not. It's not an emotional thing. It just either works or doesn't. And I came in at 5. So I made a little bit of money, but I didn't do my 10 again that I had planned. I changed up my strategy. So I didn't get my head on straight. And keeping my head on straight was like, this was like wrong. What I need to do is 10 again. So when I have the win, I have the outcome I was anticipating the first time around. So this one gets covered, and then I have the outcome that I was anticipating. And to show the power of that, so I'll play roulette because it's random and it's not great odds for fun. So I'll go in and create a model of the roulette wheel. And used to, back in the 80s, I'd go to Vegas here and there with friends, and I'd stand there for 12 hours straight where there'd be a couple roulette wheels. And I'd write down all the numbers because I was like, oh, is there some pattern to it? And the only way a pattern could emerge is if there's a defect in the roulette wheel, right? If the roulette wheel is a perfect system, the world's perfect, there'll be no pattern. It'll truly be random. But if there's any flaws in the system, it's going to show a bias. So you have a skew a little bit. So that's all I was looking for. I was like, is there skews in this? So I was at Luxor. I found one of the wheels over the course of a couple of days, had a skew in it, just ever so slightly. And I ended up playing it after that. I went 8 hours straight with probably, like in any single streak of playing, I probably had 1 or 2 losses in a row. They started getting really irritated at me. And they started doing it where the pit boss was coming over, spinning. I had 2 or 3 dealers stacked, and they were all taking turns spinning. And then they look at me and they go, do you ever lose, Oh my God. So, that was just exploiting a problem I found, and I don't know, when they spun it, the thing looked right. It looked like it was spinning around. Subtle flaw in it that I was able to exploit. And the only reason it did work too was because of what I'm saying here. All that was very methodical in playing, and I would play it the same way. So if I would have an L and an L, and then it would fix these L's. So what I'm saying is, even in a random chance system like roulette, there was a slight bias in it, a slight skew there, and it allowed me to, exploit that system. And I don't know, who knows after that, they're like, oh, it's thumbs up or whatever. But so I was able to find that. And it's the same way here. We're trying to find something to exploit in the system. Some skew. We're trying to find, we're trying to find these skews here, trying to find these zones through our disaggregation of the market data, which ends up being these patterns, these fractal patterns. So that's all we're trying to do. And we're trying to play the system consistently so that we put the odds in our favor. And again, maybe this never happens and we never get up into here. Maybe Nvidia's done and it just seeks lower and they never close another open state in the 20 daily again. Probably not, but that's another thing whenever doing something like this. Maybe Nvidia has, come up and stocks will do this. They'll base and come up like this, and then they'll kind of peak, capitulate, and then they'll come back down and they'll never visit. They get capped off up here and they'll never revisit that again. The way the system handles that with our open states, so it's deriving these open states, since we're doing a cyclical analysis like this, these open states become less and less. So this open state will become, so right now we'll call it 212. If we run this pattern, what you can expect to see on your open states is it'll be like 212. Cycles unfold. It may be like 198. The next one may be like 178, and it may be 168. So your top line open state will deteriorate. So we'll start at 212, we'll go to 198. And these are theoretical numbers, it'll compute it whenever. So, because the open states are based on the cycles. So if Nvidia is capping off, and let's say that's the highest, let's say we just came off the most recent high over the last couple of years. So this is the highest the last couple of years, and Nvidia can never achieve that again. Then your open states will deteriorate. And when we cross that line, the pivot line here, and we've got our open states up here, this top line open state that's at 212 as we cycle, maybe 198, maybe it'll calculate it out. So whatever it's going to be, but it will deteriorate and it'll come down in value. So that means as we go forward, the top line available to us to close will be at a lower and lower value. That's this. However, if we're like this in Nvidia, then our top line value, the 212 stays, and then all these other, like 176 or whatever it is, stays. Because our cycle is moving forward and it's extending up higher. So the system carving, disaggregating what's happened over here is a reflection up here. So the system reflects that data, those data points. And that's how we create, like today, that's how we create our open states to close them using that process. So the system reflects the data forward to us. And so if we climb, then we keep hitting these guys, forward looking, over, go back down. wherever that level's at. And, these open states will still be up there, but they'll just deteriorate. It won't be as high. So that means the contract 180. So that, it would have to keep dropping down and down and down for that type of leverage that I was showing. So I think, let's see here. Let's check Nvidia. So 116, we hit that 118 open state again today. Weren't able to make any progress through it. So up here. So we're probably, if we can't surge through it, we're just looking at our wide area. That implies, most likely we've got to pull back again. Maybe next week we're going to get more information on this. And maybe that's not true what I'm saying. Maybe we do eclipse the 118.68. So we need to keep an eye on that number because we need to keep breaking above that in order to seek out these. And I know from real-time trading, and I think we've all been seeing it now, there's enough time. When we do have stacked open states, man, those are like great. Had 2 stacked, 3 stacked, but it was unable to reclaim that. So it's all just timing. Can we catch this at the right time? So right now in that call, in my opinion, there's nothing to do with it yet. We're just watching. And we can slow down the action too. We can set it to a 15-minute aggregation and watch it through our vector. And because the 15-minute implies that broader time frames changing, or watch it 30-minute or an hourly, so that it's reflecting more in a change of that contract. So that's another way to do it too, is to watch a broader change. So I can post this mess into the Discord, and people not seeing how we're arriving at all this will be like, what is all that, John? But anyways. All right, I think that's it. All right, thanks.